Hey everybody, welcome back to the channel. Hope you're doing well. This is the last video in the three-part series. We are looking at underrated growth stocks, which was the first video, underrated income stocks, which are dividends, think of it as income, and now we're on the value, underrated value companies. So I wanted to make sure we can look at all the data parameters together and go from there. So we want to have the first thing I just want to get out of the way is the analyst price target, which is target price is going to be above the current price. So analysts are saying a stock's going to be worth 200, but maybe the stock right now is worth 100. So there's some arbitrage in the middle potentially. We're going to look at companies with a market cap over 10 billion and more. Again, these are going to be your more stable, not as volatile companies. Think of your T-Mobile, SAP, Wells Fargo, etc. There are some volatile ones in there though, so just a heads up. We're going to look at companies with a PE under 20. This means that they're trading lower, under 20. They're priced about right if they're under 20, essentially. With a current PE. So we have 230 stocks. So we're looking for value, we're looking for stability. We want volume, average volume to be over a million, let's say over 1 million. Let's make it over 2 million. All right, and we want the EPS growth next year to be positive, obviously. And we want this year's EPS growth to be also positive. EPS growth over the past 5 years, we want to be positive. Again, EPS growth over the past 5 years means the company has been growing their EPS, earnings per share. Quick ratio, we want over 1. Meaning if the company went out of business tomorrow, they would be able to pay off any of their debts. We're down to 7 stocks, and we want to look at companies within the USA. The only reason I say that is because companies like China, they literally can make the CEO disappear for weeks, and that could cause a reaction to the stock price. They could literally tell a company to delist. There's no real process there. So we're just going to have country as USA. And we are now left with 5 stocks. PayPal. Let's look at PayPal. Let's look at Lennar. Let's look at DuPont. MGM, which is a casino, and Intergroup. We'll have to look at that one. I don't even know what that was. All right, let's look at PayPal as a value stock. Let's see where this one is. Wow, it's at its 2017 low. That's crazy. All right, wow. This does not lie. This is a little concerning. You can see there was some consolidation right there. However, they took a step down. Maybe it's one of those scenarios where it's 2 steps back to take 5 steps forward. I don't know. This looks really good. Let's run the numbers here. So everything's in the billions, so I'm going to have it shorthand. So 66.21 billion in market cap, which is good. Plus 3.77 billion, plus 28.88 billion. Now we're going to add the cash, remove the debt. Really quick, assets is 78 billion, total liabilities 58 billion, about a $20 billion discrepancy there, which is not a discrepancy, but a variable. So they have plus 7.776 billion in cash. Total debt is 10.835. All right, and we're going to take this and divide it by 1.07. So about an $89 target price for the stock. Analysts have a $73.99. $100 target price, so it's about in line. This looks like some really good consolidation down here. I would consider a position in this one, in my opinion. Let's see what PayPal institutions are doing. PYPL. Older data shows that hedge funds institutions own 69%. New data, however, shows that institutions own 73%. And we can see it's just been in a downward trajectory here. Let's see if there's been any adding. Vanguard has added. BlackRock has added. Okay, they have a lot of shares, by the way. So I like PayPal here. I would consider owning this one, in my opinion. So we're gonna keep this one on the back burner. I do think there is some upside here, but I do think it could take some time for the upside to be realized. I just want to see if insiders have been buying. Not really. So Alfred Peggy sold 15,000 shares, but she also had 3,000 option, 3,000 option, 3,000 option, 26,000 option. So that's good. And then Auerbach Jonathan sold 64,000 shares, 3,000, 3,000 Auerbach, 3,000, 28,000. So again, it's quite a bit of shares to be selling in my opinion, but the president and CEO purchased 1.9 million at $76 a share. So yeah, looking at their profit, gross profit has been pretty flat over the last 3 years. Yeah. But I mean, if we look back to 2018, 2019, it's about almost doubled, which is freaking crazy. So I like this one a lot. We'll definitely keep this one on the back burner for a value. Lennar, what's going on here? Did they get bought out? No? Okay. Let's look at really quick. A lot of selling up here. Wow. A lot of selling. Okay. Sorry for the jumping around. Lennar is on a freaking monster tear. Holy cow. Wow. What housing crash, huh? This one is honestly too hot. Like, think about these two charts. This one, the risk reward of buying now with potentially going lower is a lower risk versus buying now and the potential of going lower. I think this is just too hot, but I mean, look, it's still undervalued. It's undervalued. There's demand, shares are going down. This does not lie. This also does not lie. It kind of looks like it's stepped down and maybe curling up. That's just my gut check there. But I mean, this is way too hot on the monthly. So yeah, this is too hot. So we would want to wait until we got in a situation like this where it's consolidating on the downside, not consolidating on the upside. I think we're due for a pullback here, in my opinion. Like, you see this line, this is a 365-day SMA, this very bottom line. You can see back in 2012 it touched this. This was the great financial crisis. 2020, this was a great lockdown. Touched it at $14. No, I'm sorry, $25, $23. And it's almost, it's gone 50% at least. It would be a large drop to come back down and touch. So I'm going to keep Lennar off this list, sorry. DuPont, which is chemicals, it's trading at the same prices back as 2018, which is kind of crazy. Let's go down and look. Oof, I don't like this. Heading downward, this is also flat. What's going on here? What are institutions doing about this? Let's see. Ooh, minus 6%. Institutions own 77%. This is showing, not showing much. I do not want to do the longhand math of taking, they own 473 million. Was that right? Apologies for the ads. I thought I had an ad blocker up. Yeah, I can't really tell, but this is not the greatest looking stock, honestly. Strong reversal here. It's undervalued today, but in the future it's overvalued. So that is weird. That is very weird. I just want to look at the quarterly revenue, 1.9 billion. Flat. It's flat, man. We're gonna pass on this one, I think. I mean, let's just do a quick draw. Definitely looks like a breakout to the upside, but I mean, it could be a fake out. I mean, I don't know. This is all very strong as well, indicating a continued move up. Let's go ahead and just, let's see what the numbers give us, actually. I'm interested. So, 33 billion, 80 million in market cap. They do 4 billion, 600 million in income. That's great. 12 billion, 270 million. That's great as well. Total, they have some cash, no little debt, it looks like, too, which is awesome. Take this plus 1 billion, 338 million minus total debt of 8 billion, 215 million. All right, not bad. This is going to be divided by 428,500,000. $100 stock price trading at 76. And they also include a dividend, which is also going to bring this estimated price down. Analyst price target average $82. We have $100, $101, $96. I don't know. What's EPS next year? 15%. Gross margins almost 30%. That's high gross margins. I mean, this really could take off. Let's do a deeper review here. Let's do DD. My system says to buy it right now. It's gonna hit some, yeah, $81 is the next resistance. Let's check the yearly MACD. I do care about the yearly MACD. Yearly MACD is heading down. Interesting. Very interesting here. Yeah, I mean, it's a very bullish yearly candle in my opinion. I think we could see it get up past 8. If it gets in above and holds 81, that's really good. And I think it could get up there. I think it could. I have a $100 target. Analysts have 82. If it gets and holds above 81, that's really good for the following year. I'm going to keep this one up. All right. So I like PayPal and I like DuPont. All right. MGM looks really hot right now. Let's just do some quick drawing. It's breaking out. Okay. It's breaking out up into an ascending triangle. So, okay. It says it's fairly valued right now and in the future. Earnings per share this year, 184%. Holy moly. This does not lie. This does not lie. This is also amazing. It shows that there's real demand for the shares. What are institutions doing with MGM right now? I just want to see. MGM Holdings right now, old data shows institutions own 68.9%. New data suggests 77%. So that's a good 9% increase. Okay, we can see the tides are turning here. Right here, we kind of see it flat and then maybe a little curl there. I like this. I own this one in my M1 portfolio. I think we might as well just go ahead and see what our price target gets us. Yeah, let's do that. 15 billion, 260 million market cap, good for them. Plus 1 billion, 110 million. Plus they make 15 billion, 380 million. That's good. No dividend, which is good. More money for them. Ooh, was this right before the data breach? No, it was after. And I'm looking at these shares and I'm actually thinking these might be tax purpose sales. These could be tax. You do your own research on this, but I think these might be tax sales. The only reason I say that is because the shares are at a flat 10,000, 10,000. So let's go back here. Balance, total assets 45 bill, total liabilities 40 bill. That's dangerous. Dangerous. Total debt is 8.8 billion. That sucks. They could pay it off, but that sucks. They're actually paying it off. Okay, they are paying it off. They went from a high in 2018 of 15 billion to now 8 billion. That's really good. Good for them. That is really good. They've trimmed 7 billion. That's good for them, honestly. Okay, so they have cash of 5,911,890,000. 5 bill? Yep. Total debt, give me like 10, 20 bill. Total debt, 8 bill. I just said it. Okay, 8,879,890,000. Not as much as I would expect there. And then let's divide this by 274,320,000. $104 stock trading at 44. Oof, I like that. What's the margins here? Gross margin 34%. That is a high growth margin. This is a value stock with high gross margins. Wow. I don't know what to say other than wow. I really like that. I really like it. They donated 360,000 to the International Center for Responsible Gaming. Wow, I really like that. I see. So there's a couple things with ascending triangles. When you see a stock actually fighting the trend of an ascending triangle, there's usually power behind the stock. We'll look a little bit more in depth what I mean by that. Here's what I mean. So looking on the yearly chart, I think we see power here. I think we see a turn in momentum. We do. Look at this. Momentum is heading up. Oof, I like this a lot. I like this a lot. And if I activate this drawing, I'll activate this one, activate. And we put this up there. Next year, which is $58 stock, I think we could see this touch 58. Not that I'd want to sell and keep the gains, but yeah, I like this one. So MGM also considered to be a value stock. Again, do your own research. This is a gaming company. I don't know if you partake in gaming, you believe in gaming, but I like PayPal, DD, and MGM for value. That's pretty cool. I never thought I would say that. MGM. This is advertising agencies, which have been hit hard. Wow, this does not lie. This also does not lie. This does not lie as well. There's demand. Interesting. I don't know what to think about this. What's this all about? I don't think I've heard of this company. Wow, it's had an all-time high of like 60 before. Wow, it goes all the way back to the 80s. I love that. Let's look at this, IPG. What's the yearly one? Oh, nice. Ooh, actually, it looks like it's kind of fading. Looks like it's kind of fading down here too. You see that light green candle and then these cells? So there was this was a year of selling, 884 million in sales and then 1 billion in sales. But it also could be a bull flag as well. Right here, flag up. We're gonna have to dig into this one because I am interested for sure. Let's reset this. All right, I'm interested. I'm biting. Okay. Let's look into this. All right, 12 billion, 50 million in market cap. Plus they make 932,400,000. That's insane. Plus they make 10 billion, 850 million in sales. Yep. Total cash is 2 bill, very nice. So plus 2,545,300,000. Total debt be like 10 million, 10 billion. Total that's only 2 billion. 950 million. All right. And then I just want to check this real quick. Total assets 10 billion. Oh wait, sorry. Total assets 18.8 billion. Total liabilities 15.1 billion. That's scary. That's way too close for comfort for me. Have they been better before? They've always kind of been really close to comfort. They're actually getting further apart. They're actually doing this. They're actually getting further apart. From the assets are separating from liabilities, is what I'm trying to say. So they're about $3 billion apart right now, which is good. Total cash, this is historically actually pretty good for them for cash. So that's good. Looking at their gross profit, it's pretty flat for the last couple of years, actually. Gross margins, 13%, pretty low, but let's continue on with my calc here. This divided by 381,600,000. $62 stock trading at 32. That's about a 100% difference. I like that. Okay, institutions own 102%. Come on, that's crazy. IPG, is it over 102%? Let's find out. I'm going to say yes. Do you see that? 113% right there. So they bought more and it actually looks like it's kind of waving up. We see like a wave, like a dip purchasing and then a little dip here. Craziness. Okay, so let's go back here. I mean, sales are getting better. Shares outstanding are kind of going down. EPS kind of flat. Insiders are, what are the insiders doing? Insiders are selling about 20%. 20%, that's less than 10%. That's a lot. That's 20 plus percent. 20 plus percent. It's a lot. So people they've been selling around 33, 35. Right now it's at 32.64. Let's just take a look at the weekly here really quick. Okay, we might have topped out on the weekly here. So we can give it a couple weeks to see. And then the daily chart kind of looks like it's flatlining. Their earnings were not that good. Did a gap down. I would give this one a couple weeks. Let's just chart this out really quick and see what potentially we could be looking at. Let's go to the big. Let's go to this one. Let's go to the monthly. Let's remove all these or let's remove the studies. Remove studies. Okay, so I mean, look at this. It's right on target. But however, it kind of looks like it should come back down here end of year. So what I was actually going to do was this Fibonacci arc from 58.38 to 257 right there. And then from there to this high, which is about 40.95 right there. Okay. So yeah, it's kind of in a, what do I call this? Like it's stuck, well, it's above this historical arc downward. So it's kind of free from the resistance. However, I think it's going to get sucked back in down here, and I think it's going to be really choppy, honestly, until 2029. Unless there's some real turnaround here, which I can't predict. So whoops. So right there. So right here is my apex. So this is the area I would put in my catalog. I would say, okay, we're going to come back here in April of 2029 because it looks like it's going to bounce here, come down here, do a little pinball action at best. And I don't see, going back here, I don't see like any catalysts other than institutions owning a ton of stock. There's 381 million shares float, so it's really hard to make this stock volatile. For example, let's go to the day chart. The high was at $40, the low was at 27, so that was about almost a 50% drop actually. So it's kind of volatile right now on the daily. We want to see some consolidation. So it bounced off of 27, people bought it up. People might be taking profits here. We don't really know. I don't think you can go wrong waiting for this one to chill out. Yeah, so IPG, I would check back on this 6 to 8 months. We'll check back on all these in 6 to 8 months just to see. So yeah, that wraps up my 3 video series for our underrated growth stocks. We liked OPRA, UTHR, value stocks, or I'm sorry, income stocks, we liked, gosh, I already forgot the names. They're in the last video. And then for the value stocks, I do like PayPal, DuPont, and MGM, and then watching IPG over the next few months. So if you guys watched all 3 videos, you're awesome. If you guys are just tuning in for the first time, thank you for watching. Take care of yourself. Talk to you later. Bye.